Just tapping in real quick, man. What's going on, YouTube? Listen, man, I wanted to quickly hop on here and talk about stocks that I invest in during a recession and or during a bear market, okay? That's typically what is known as when the market is on a constant decline, okay? It's constantly going down. There will be pops of dead cat bounces where it has temporary days in which it bounces up, okay? But there's a way that you need to position yourself, okay? And so this video is tailored strictly for my investors, particularly my long-term investors, okay? So listen, to all my traders, to all my people that get it in with the options, what I'm about to discuss right here doesn't necessarily pertain to you guys and the way you guys move and operate in the market, okay? So again, feel free to sit this one out. I'm talking to my long-term investors. I'm talking about those that build that slow money, you know what I'm saying? That money that just lasts forever, okay? This is how you build real wealth, okay? Now listen to this, guys, and major salute to everybody that did their thing this week with us with options and with just plays in general that we were taking advantage of to the downside, okay? But this right here is strictly for my long-term investors, guys. Listen, right now is that point in time where it's important that you guys invest in things you know, like, and love, okay? This is what a recession puts on you, okay? This is what it demands of you. This is where you have to have a high conviction. You either need to know, like, or love the company that you invest in. Remember, we don't buy stocks, we buy companies to begin with. So I often tell you guys, my number one stock in my portfolio is Nike and Apple, okay? 1, 2, okay? 1A and 1B, I call them, okay? Check it out. Apple Watch. I'm recording right now on my Apple phone, okay? My computer is an Apple. When I'm in the gym, all of this stuff, Nike, okay? Everything is branded, sponsored, okay? I rock with those products. I know, like, and love those products, okay? I use them. I'm familiar with them. I know the balance sheet. I know the company. I know the CEO, okay? And so you need to really think about during these times where you're going to have all plays going down, okay? Nothing is safe, okay? Nothing is safe. Individually, you got to think about what you know, like, and love. One safer route is index funds such as VTI, okay? That's my number one go-to. That's the play that I first built my millions off of, man. I share that all the time. I've been telling you guys that story from the jump, okay, way before I retired. But the next one is VNQ. Now, this is a REIT, okay? Those of you want to own real estate, you want to own the building that CVS is in, you want to own the building that your local mall is in, things of that nature would be something like a REIT. Not only do you see it hold up better during down and volatile times, it also pays out a good dividend. So those of you needing or looking for passive income, it is a great route to go, okay? Now, again, don't ever get this YouTube and this Robinhood 100K challenge stuff mixed up with my real life wealth, okay? It's two separate things. I'm trying strategies, I'm teaching, I'm making sure I'm in some of the plays that I'm recommending. So you just take what comes with that, man. Hopefully those that appreciate it. But that being neither here nor there, guys, there are ways that you dominate and navigate certain periods of the market. Right now, we thinking about bear trends, down trends, potential recessions. I don't like to use those words, but I want to put them in an atmosphere for the sake of knowing that it's a buying opportunity. I don't want you to fear it. I don't want you to run from it. I want you to be thinking like, oh, this is how these guys are scooping up all these plays at dirt cheap prices, expecting a recovery. Now listen, I have a tendency to say stuff like all plays recover. Guys, some plays don't recover. When I say all plays, I'm thinking at my first mind, Apple gonna recover, Microsoft gonna recover, Facebook gonna recover, Amazon gonna recover, Google gonna recover. When I'm speaking like that, and I'll try to do better and be better at that, because I don't want you just thinking you can buy Hertz and then Hertz will come back to its glory days or something like that, or a company just with a bad balance sheet, bad leadership. Okay, it don't happen like that. Sometimes things turn around. Sometimes companies fade away. But when I say stuff like that, I'm talking about credible household quality companies, the ones that we hold as our core position of our port. If those go down, I'm talking very, very certain that they are coming back. I can't speak for more speculative names, you know what I'm saying, stuff that just hit the market that you know what I'm saying, that don't have a track record. And when they go down, I can't speak for whether or not they will truly bounce back. I'm talking about, like I named, the Apples, the Microsoft, the Facebooks, the Nikes, the Starbucks, you know what I'm saying, things of that nature. Those plays 9 times out of 10 bounces back fully and some, okay? You can take that one to the bank, okay? So I'll try to be more clear when I say that, okay? Now listen to this though, guys. Other plays that do well during recessions, okay? Just because you kind of offset some of the, whether it's inflationary, whether it's interest rates, are dividend plays, okay? Now check these out. And those of you that's rocking with me on the Dividend High Growth Challenge this year, okay, make sure that you are, whether you're buying during this downtrend or you're buying just in general as a dollar cost averaging approach, that you're adding some of these dividend plays to the fold, okay? Because these will do well, but also they will pay out, whether monthly, whether quarterly, okay? So listen, guys, there's a strategy for no matter what the market is doing, okay? And as a long-term investor, or those of you that's building that slow money, that money that lasts long, okay? You guys want to make sure that you invest in things you know, like, and love during this time, okay? So I always share this story, and shout out to the individual that I'm about to reference on this. You guys know every day of the week, I talk to the family, okay? And I do coaching calls. And so I really take people to a whole nother level when we rocking out on a one-on-one tip. And I had a lady that, I'll keep her name out of this, but she was telling me, she said, Chris, I love to cruise. My husband and I, we love to go on cruises. And so she said, to me as an investor, I'll do anything you tell me to do, but I gotta have Carnival Cruise, Norwegian Cruise Line, Royal Caribbean. And I love that because she know, like, and love those companies. More importantly, she loved to go on cruises, and so she's sticking to what she know. She didn't abandon the cruise line just because reopening plays are down. Like, she's building those plays out, has done very well. She's knowing which ones to hold, which ones she's taking profit in, and she just crushes the game because, and for her, traveling is her thing. Her thing is going on cruises, her and her husband, and they kill the stock market. We don't, like I always teach them, and I teach thousands of other people, we don't care what the market do. We stick to the game plan that we put in place, okay? And she just one example of many that I can tell you, that you know what I'm saying? And so that's where a lot of the joy comes from, man, just really getting it in with real people, getting real results, and then teaching and showing them the way, okay? So major salute, you know who you are, you know who love Carnival Cruise, Norwegian, or Royal Caribbean, and you know how you're killing it no matter what those plays are doing, because we rolled them up, we dollar cost average, we did our thing in those, okay? But listen, guys, that's what it's all about during this time. That's how you want to invest during a recession and or a bear market, okay? Both just means plays will go down at a more consistent level. It don't mean that there won't be days and pockets that you might have a green day, or 2 days in a row might be green, but a lot of that is what's called and known as the dead cat bounce. And that just simply means that it's just, I often say a fake out breakout, or a pump fake, and it's gonna come right back down in a couple of days. So make sure you don't get too antsy. Make sure you get real confirmation out of your plays if they're really about to reverse, because other than that, guys, they're just really looking to fall back down till they find a bottom, till they find a floor before they begin to settle and then go back up, okay? Remember, man, we most consistent in the game. We're gonna stay that way. Follow the blueprint, follow the principles of investing. Make sure you put your $500 in every 2 weeks. Make sure you put your stop loss on any high risk plays you got. Make sure you guys are, again, running the play we call in the huddle, okay? Guys, we stand 10 toes down. We not panic selling. We not doing anything hasty, okay? We're sticking to the script. We're sticking to our game plan, okay? And if you do that, I'm telling you, when all this dust settles, typically you come out on top 9 times out of 10, man. Stay the course. And remember, guys, embrace the grind, but more importantly, enjoy the climb. Listen, guys, we make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. But do me a favor. Don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below. And I'll see you all in the next one. Peace.